Welcome to the course on Master of Technical Analysis by Stock Market Files. Today we are going to discuss a chart pattern called as wedges. So this wedges looks like this. They are formed by two trend lines. There are two types of wedges, a rising wedge and a falling wedge. So this rising wedge is formed by two trend lines which are upward sloping. These are upward sloping. You see, this trend line is upward sloping. This is also upward sloping. So thus a rising wedge is formed. The point to note here is the slope of the lower trend line, which is also called as support line, is much steeper, or at least more steeper compared to the slope of the upper trend line, right? So thus here the price is making higher highs. You see, this high is lower than this high, or this high is higher than this high, then this high is higher than this high. The price is making higher highs. Also the price is making higher lows. You see, this low is higher than this low, this low is higher than this low, this low is higher than this low. But the thing to note is the higher lows are made much faster compared to the higher highs. That's why this trend line is much steeper or more steeper compared to this trend line. So this is a rising wedge. So this rising wedge is normally a bearish signal. So that means when the price breaks this wedge, we may have a downtrend, or we may have a downfall. So when this wedge is formed after a downtrend, it will be a normally trend continuation signal. When this wedge is formed after an uptrend, so this wedge will normally be a trend reversal signal. So now the falling wedge, again the falling wedge is formed by two trend lines which are sloping towards downward sloping. So you see both the trend lines are sloping to downside. So the lower trend line is called as support and the upper trend line is called as resistance. The price is moving between these two trend lines, making lower lows and lower highs. So you see, this low is lower than this low, this low is lower than this low. Also here, this high is lower than this high is lower than this high, and this high is lower than this high. So the price is making lower highs and lower lows. But the point to note is the slope of this trend line is steeper compared to this trend line. That means the lower lows are formed at faster rate compared to the lower lows. Lower highs are formed at faster rate compared to the lower lows. Thus we get a falling wedge. Now this falling wedge is normally a bullish signal. So when this wedge is formed after an uptrend, so this is normally a trend continuation signal. That means the uptrend will continue. When this falling wedge is formed after a downtrend, so normally that is a signal of trend reversal. That means the downtrend may now reverse and we may have a potential uptrend. Okay. So that's a falling wedge. So now let's take the real chart example. So here is an example of a chart. You see, this is a nice wedge pattern where the price is taking support on this trend line and it is taking resistance, it is facing resistance on this trend line. You see the slope of this is a rising wedge, so slope of this trend line is steeper compared to the slope of this trend line, and it was a uptrend. It was an uptrend. The price was in the uptrend. So when the price breaks this trend line, we have a huge downfall here. So normally we keep our stop loss on the other side, and the target will be you can have a target as the length of this opening of the wedge, right? So here we have got our target achieved. So again, this is an example of the rising wedge where the price is moving between these two trend lines. Remember, in order to form a trend line, we must have two swing highs or two swing highs or two swing lows in order to draw a trend line. So here I have two swing highs here or two higher highs here, so I can plot a trend line. Here also I have two swing lows, this one, and I can plot a trend line, right? So you see, when this wedge pattern is broken, right, so we have a huge downfall here to the downside. Again, now this is a falling wedge. You see, this is a falling wedge. The slope of this trend line in the falling wedge, the slope of upper trend line is steeper compared to the slope of lower trend line. So you see, the price is moving between these two trend lines, right? So this is a falling wedge, and you see the wedge is the pattern is broken, and we have a downfall here, and we have a huge fall in the price. So thanks for watching.